Welcome to the Unlock Your Business podcast. Today we're going to be talking about the death of the financial planning industry. Hi, you're listening to the Unlock Your Business podcast, where we discuss ways you can unlock your personal and business wealth with financial, investment and business strategies. I'm Rafi Pelagian. I'm a financial advisor and run financial services businesses that aim to help individuals, families and small to medium business executives manage, grow and protect their wealth. Through this podcast, I share my experience and knowledge from a financial advisor and business owner's perspective, in addition to my wins and struggles. So if you want an authentic and honest discussion on personal and business growth, investment, management, and unlocking wealth creation strategies, you have come to the right place. The Unlock Your Business podcast is brought to you by financial advice firm Manly Financial Services. Please see the website links in the show notes. We hope you enjoy the discussion. Welcome to the Unlock Your Business podcast. Today we're going to be talking about the death of the financial planning industry. Now, this isn't a topic that I want to talk about, and maybe I'm over-dramatizing things a little bit, but there's some things happening in the market at the moment in relation to the regulation of our industry, and it's about time that people speak up and some of this information goes out into the marketplace. Because I think financial planners are required now more than ever, primarily due to a lot of government policy. And it's government policy that's making it harder for financial planners to do what they do, to provide for their clients. So firstly, let me apologise if the lighting isn't great here, or if the sound's not fantastic, because I am recording this podcast at home, outside. But it is quite a nice day, and it's been raining so much that I'd rather be outside as opposed to indoors. So let's talk about the death of the financial planning industry. So firstly, let's talk about the importance of financial planners. I mean, we're an industry that's been hammered with, you're not professional, you're not this, you're not that, you're salesman, all that kind of thing forever. So let's talk about what financial planners actually do. So where clients come to us, they want to achieve particular financial goals and objectives, and our role is to help them achieve those goals and objectives in relation to investment markets, in relation to tax law, in relation to other areas and strategies where they can benefit. We're different to accountants in that accountants will report backwards. Their job is compliance. Their job, sure, they do give advice around structuring, and we work very closely with a number of accountants, or with many accountants actually, in terms of structuring clients for their going forward. But the main role of an accountant is to report on what has happened to the tax office and to get the best possible outcome for a client. Lawyers, on the other hand, obviously do look forward. Their job is more transactional insofar as they will give advice on structuring assets, structuring businesses, structuring contracts, deals, and all sorts of things. So in that respect, financial planners and accountants are quite similar in that we have an ongoing long-term partnership with clients. But the difference is that we are working in an environment where the goalposts on all sides are constantly moving. Now, what do I mean by that? So if I'm an accountant, the main goalpost that's really moving is government policy, tax law. I mean, that's always moving. They can't make up their minds. And this is really a lot of the problem in a lot of industries, in that the people in charge of portfolios really have no idea about any of these portfolios. And there's so much, I won't say self-interest, but there's so many other interests in there that are in the mix, if you like, that is really affecting the day-to-day of a lot of people, small business owners like myself, and a lot of my clients, because they've got to, effectively, they're paying part of those cost increases. So the moving, the section around, the moving goalpost for accountants is tax law, and other types of legislation that's going to affect things that they do in terms of, business taxation, personal taxation, superannuation, blah, blah, blah. In our respect, obviously, we've got to manage that as well, because we're giving advice looking forward. And some accountants, just like some financial planners, they don't want to go into the technical too much. They're more around compliance. By compliance administration, I mean tax returns, making sure they're done on time, making sure they're done correctly and lodged, so the client doesn't have an issue. But from our perspective, the goalposts that are moving when we're looking at things quite technically are the legislative goalposts, the taxation goalposts, helping around legal structures where obviously we need the advice and the specialist service of a lawyer, but we can give some guidance to a particular to a particular level. But the other goalpost we've got is the goalpost around investment markets. And investment markets, if you've been watching markets at all, even in the last just 6 months, with Trump's Liberation Day announcements and tariffs and this, that, and up markets, down markets, people panicking, all sorts of geopolitical issues, what's going to happen, peace deals that sort of don't really work and all that kind of thing. I mean, that's huge. That's absolutely huge. And those goalposts are constantly moving. They're moving every day. They're moving 24 hours a day because while we're asleep, there's other markets, obviously, that are and countries that are still operating. So from the perspective of financial planning, a financial planner is critical for a client to effectively be able to position themselves in such a way that they'll achieve their goals and objectives over the long term via this partnership. And the financial planner must work with the accountant, the lawyer, and whoever else is in the picture, particularly on more complex sort of client scenarios, family groups, intergenerational wealth, all that kind of thing. It's really important they work with them because we effectively the people that are helping manage these multiple goalposts, which are constantly moving. Let's imagine you're playing basketball, you're trying to shoot a basket, or you're playing golf and you're trying to make a shot and hole, and the hole's constantly moving, every which way. That's effectively what we're doing. So it's quite important for a financial planner to be in the picture. We obviously help clients with, as they're developing themselves with their cash flow, their budgeting, their debt management, getting rid of bad debts that other people have probably recommended to them, and obviously a lot of those commercial debts that are out there, buy now, pay later schemes, all that rubbish. We've got to help them with their savings. We've got to help them with their investment, with their debt management, how they structure their debt, what investments they buy, what types of assets. You can't just buy one type of asset because it won't help you potentially in terms of a particular facet, whether it's income, whether it's growth, whether it's tax benefits. So a lot of it goes into it, obviously, superannuation trusts, other investments. So financial planners can really help with anything, all the way through the life stage of a young client who's starting to save, put some money together to buy a car, start a business, get married, a younger couple looking to have children, buy a home, growing family, putting money aside for holidays and wealth creation, people in 10 to 15 years from retirement looking at that, I'm going to retire soon, I've got to start planning for this, people in retirement or entering retirement, all the way to aged care planning, and then helping the family, the dependents, the beneficiaries of a lot of our elderly clients in terms of the aged care, in terms of the intergenerational wealth transfer, which is going to be a huge thing, managing things tax effectively. So the government gets a small amount of money. Obviously, they're gonna get their taxes. They're gonna get what they're owed. Owed's an interesting word. But then the family keeps most of the funds. Why? Because we need the next generation to be able to build on those funds, to be able to build that legacy for future generations of the family over and over. Now, years ago, probably over 10 years ago now, we had the Royal Commission. And the Royal Commission into Financial Services initially was focused on the institutions. The institutions. Now, the big institutions being the banks. The banks at that time owned mortgage broking, owned financial planning, owned funds management, owned superannuation. They were hugely vertically integrated. They had income streams all the way along that vertical dynamic around the products that clients would use. Debt, savings in terms of the bank, finance, investments, superannuation, the works. The Royal Commission showed that these institutions had a sales culture, and I don't mean sales culture I don't think sales is a bad word, but a really aggressive sales culture where clients were investing in structures, assets, products that they really didn't understand. Why? Because they were emotionally driven. If a client comes to me and is looking to borrow some money to invest in property, I mean, even if it's not a good deal, they're emotionally invested in that more than they would be emotionally invested in, say, structuring some insurance to help to protect themselves and their family. Emotions get in the way, and salespeople, and institutions were taking advantage of those because they're making revenues all the way along that vertical sort of dynamic, if you like. So the Royal Commission forced them into breaking up these huge organisations, breaking up, selling their investment arms, maybe listing them, selling their superannuation. No bank has a financial planning arm anymore, and majority of the financial planners out there, or at least half, were bank financial planners at the time. Now, they were all doing a great job. They're great people. I've got many friends that used to work for the banks in the financial planning space, but they were they were managed with sales targets that just promoted, in a lot of cases, sales. So not every one of those clients went into the structures that they should have. The other thing is, majority of those banks only were allowing those really good quality planners to sell, structure, utilize those products that the bank owned. So there might be better products out there, but you can't use them. Why? Because you work for us. So effectively, after the Royal Commission, the banks, the AMPs of this world, all this kind of thing, we've all heard about the, fee for no advice or fee for no service and all that kind of thing, right? So we all saw that from the outside, and a majority of the planners out there, or the ones that are left, more so the independent financial planners, the IFAs out there, we're watching a lot of this occur, and obviously we know what's happening. We know what's occurred, and what we've seen is that those institutions getting rid of those financial planning arms and all that kind of thing, it's all resulted in a 50% reduction of financial planners out there. Now, initially, I and other IFAs, associates, friends of mine, we all thought, well, this is a good thing because obviously we've got less competition. But while the government was pushing for reforms that led to less financial planners being out there, obviously that wasn't their end goal. I'm sure of that. But the reforms that led to that outcome. What we also saw is that compliance and regulation, again, kept increasing and increasing in terms of the regulatory burden. Now, again, I'm not really against this. And I guess I'm not against it because I've been in this industry since '99. And if there's one thing that's certain is regulation, always is cyclical. We get tightening of regulation, then loosening, tightening, then loosening, tightening, then loosening. As governments come and go, nothing is done long term in this country. Every viewpoint is around the election period, the 3 years or whatever it is. So effectively, you're getting that sort of up and down all the time. Now, the interesting thing about the Royal Commission was that we weren't the only body or sector of the financial services community that was targeted. Mortgage brokers, which are of huge numbers, which are, arguably dealing with clients' biggest asset being their home. And we've got mortgage brokers in-house, so this isn't against mortgage brokers. But the mortgage brokers were also targeted. They were targeted, and people were looking at their commission structure being changed and their best interest regulation being tightened and all sorts of things. So everyone was a little bit perplexed after the Royal Commission around what is the possibility, what are the possible outcomes of this. But see, the MFAA and the other institutions around mortgage brokers are a lot stronger. Why? There's only really one of them. Okay, there's one industry body, and a lot of those brokers, majority of those brokers, have to, via their aggregator, be members of that body. So when an industry body goes to government and starts lobbying, if they can say that they've got 50,000, 100,000 brokers, I don't know what the number was, then obviously they're going to get somewhere because that's 50,000, 100,000 votes. Okay? Planners, on the other hand, we're looking at 26 odd thousand or something like that planners. I think it was sub 30,000 planners across the country. And we, at the time, had two industry bodies, the Financial Planning Association and the Association of Financial Advisors. Now, there was a couple of other small fringe ones as well. But because of where financial planning, obviously being a younger profession and where it's sort of come from, one on the one side from the investment side of things, stockbroking, this, that, and the other, and on the other side from the life insurance sort of industry. Not all the members of the financial planning industry were members of the one body, because we don't have one body. And the two bodies really wouldn't work together as cohesively. Now we've got one particular body, but it's a little bit too late, because effectively all the regulation that was recommended for the mortgage industry, more or less all of it they got rid of. They ignored it. The government ignored it in terms of their policy. But for the financial planning industry, a lot of that regulation got adopted, a hell of a lot of it. And that, to a large extent, led to 50% reduction in financial planners. Obviously, a lot of those planners came from the banks, and the banks are selling those arms. Some of them may not have stayed in the industry. That's understandable. A lot of other planners saw the valuations of their businesses fall and got out of the industry. And they can see the costs of regulation skyrocketing. How can I charge my client more money to make that money back so that I can keep my profit margin? If you're lucky, you have a profit margin in this market. And, so a lot of them sold their businesses, probably for a lot less than what they could have prior to all that. But if there's one thing we know, there's bad apples in institutions all over the place. I mean, it's not just the financial planning community. Religious institutions, that's been huge, hasn't it? We had a Royal Commission there as well. They've had bad apples. Sure, there's bad apples in banking. Of course there is. In legal, of course there is. In accounting, of course there is. Car sales, of course there is. Builders, of course there is. Every trade, there's bad apples everywhere. It's just human nature that some people are not going to act in the best interests of or ethically or in the best interests of the people they're serving, the people who are going to pay them. That's not to say that we should say that all of a particular industry, every member of a particular industry is dodgy. I mean, that's stupid. And anyone who says that, I mean, try saying that in front of me, you'll just get an earful. I mean, it's ridiculous. There's bad apples everywhere. Does that mean that one particular industry should be targeted when there's bad apples in other industries? Of course not. Of course not. But politically, they'll do what they want to do to make it look like they're doing something and to serve the best interests of other areas. And we'll talk more about that. I'm not going to shy away from that. Don't worry about that. So one of the things we've got at the moment, obviously costs have been driving up from regulation for such a long time. And again, I'm not shying away from regulation. But every 12 months, we've got to get a fee consent document. Let's just talk about one example. A fee consent document signed off by our clients to say, yes, we accept that we've been provided the services that we've been offered. Number one, perfect. Nothing wrong with that. We know the fee that we've paid for those services. Transparency, love it. Nothing wrong with that. I wish everything was transparent in every walk of life. And thirdly, we accept that to extend the engagement for another 12 months, okay? Nothing wrong with that fee consent scenario. And in fact, the client, any time within the 12 months, can cancel that engagement. So the power is 100% in their hands. No problem with that at all. I'm a human being. When I'm buying different things, goods and services, I want to have that power in my hand as consumer. But then what we need to do is we need to get that signed off for on a document that the ASIC and our licensee would be happy with. Then we have to get exactly the same thing signed off for every different investment platform or administration platform that we've got. So I've got to duplicate, I've got to get 4 copies of everything and get them all signed off. That's a small example. Now, if I'm trying to run a client base of 100 odd clients, which I can easily do quite actively, and give them a high level of service, 100, maybe 150 clients with our back office and team, that's a lot of documents. That's a lot of documents and a lot of time spent on things that aren't that important. Why? because the regulator can't basically decide on one form or one format that would be accepted by the licensee, the regulator, and the product providers. Can't be that hard. Put it all on one document. Really, can't be that hard. One example. Another example is around the financial planning document reforms. Now, we prepare these financial plans at the moment that, don't make a lot of sense. So what I have to do personally is I actually prepare a PowerPoint presentation for my clients in addition to the financial plan, the statement of advice, which explains in normal terms what we're trying to do without all the legal jargon and all that as an addendum to this legal document. Of course, the legal document is what I've got to do based on what the government, what ASIC, what the regulator wants me to do. Does that explain to the client? Does that give them a clear understanding of what they're getting into and what they're going to be doing and their commitment? No, it doesn't. It confuses the shit out of them. It's the most ridiculous thing ever. And of course, quality of advice review and after review and all this crap that all these useless politicians have come up with have come through and recommended new things, new regulations several years ago, new ways that we can provide this advice to make it clearer for clients to understand what they're doing. And I don't then have to prepare 4 different versions of something so that my clients can understand, which I'm doing at the moment, obviously bearing a cost. A lot of that cost I'm absorbing. It's not going to be good for the continuation of our business, and therefore it's not going to be good for my clients to achieve their goals if I'm unable to, give them that same level of service and advice for financial reasons. We haven't seen that those regulations come through. We haven't seen that at all, and we're not going to see it for quite a while. Now, this last one really takes the cake, and I'd like other people, whether they're in the financial planning industry, they're consumers, or they are business owners, to really think of how this could apply in their business or in their industry and how ridiculous it is. So there's this new thing called the Compensation Scheme of Last Resort, CSLR. And I'm going to read off my Google here because I want to get all the words correct. It's an Australian government initiative. Fantastic. That already you know where this is going. Designed to provide designed to provide compensation to consumers who've been victims of financial misconduct and have an unpaid determination from the Australian Financial Complaints Authority, AFCA. It was established to build trust in the financial services industry and ensure consumers are compensated when financial institutions fail to pay what they owe. The scheme is funded, this is the important part, the scheme is funded by levies imposed on the financial services industry and is managed by a non-profit company that commenced operations in April 2, 2024. The key there is that it is funded by levies imposed on financial services industry. If a company, financial planning group, product provider, whatever it is, does something wrong, they will have their professional indemnity insurance and all sorts of different insurances. The directors of those companies will have personal assets. If they're listed, obviously there's going to be corporate assets. Can't we go after those assets? Can't we claim on that insurance? Why should another professional in the same industry but who doesn't know them, doesn't use them, has never heard of that company, why are they fitting the bill? It makes no sense. So listen to this. This is from IFA magazine several weeks ago, independent financial advisor. I don't think I can use the word independent. Sorry about that. But that's what they're called. What do we got? So there's different options around these levies. Initially, the levies were looked at to be overall as high as the numbers here. It's a stupidly high number. In financial year 2025, 2026, levies estimate initially it was $67.3 million, and now they've reduced that amount that they think they'll need to $47.29 million. So there are a number of ways this is going to work, but we all know how it's going to work. Advisors are going to have to pay for everything. That's just what happens. So we're going to be paying somewhere around that $3,000 to $4,000 per advisor, right? It's obviously going to go up if less people enter the industry or leave, or more people leave the industry, based on 15,233 current advisors out there on the with ASIC on the as at the census date. $3,000 to $4,000 I'll have to fork out per advisor to pay for other people's mistakes, other people's non-ethics. I mean, this is stupid. Have you ever heard of anything like this? What if a doctor on a malpractice suit had done something, and then all of a sudden every other doctor in the country or every other surgeon in that particular area would have to pay a levy to bail out the poor patients in that area, whether it's plastic surgery or whatever? I mean, that's stupid. If an accountant makes a mistake and it costs a client tens of thousands of dollars in taxes that wouldn't need to be paid, or forget about an accountant, someone buys a property from a real estate agent that is playing games and doing silent auctions with different purchasers to push up the price because they know that if they get it over a particular level, they're going to get a higher rate of commission. So someone goes overs and buys a property for 10, 15, 20% more than it's worth in the current property market where prices are already stupidly high. They're paying an extra 10, 15, 20%. Will all real estate agents in the industry have to pay a levy to cover for that guy's or that girl's, that operator's, lack of ethics? Of course not. But the financial planning industry will have to, because these guys running the country, they don't know what the hell's going on. So effectively, every advisor is going to have to pay this certain amount to bail someone else out, to put money in a product that they've never seen before, never heard of or anything, people they don't even know, instead of being able to utilize that person's professional indemnity, ensuring that they've got enough professional indemnity cover and all that kind of thing. Their personal assets, whatever it is. And we've seen this already over and over again. We've already paid these levies. And they're just going to go up and up and up. So if I'm going to stay in business, how do I manage those levies? How? Well, there's really two ways. The first way is that I'm going to pass them on to my clients. All right? I'm not going to try to engage that many more clients. I want to keep my level of quality up there. So I've got to pass on the cost to my clients. And the second way is that I can just go and play the volume game and lower my quality of advice to my existing clients to pick up new clients to be able to cover the bill because I don't want to pass it on. Well, how does that work? Who suffers in that? Well, the client does. Obviously, I would too, because the value of my business is going to fall because it's going to affect my business. But it doesn't matter. The governments that are there for the so-called battlers, whether it's Labor or Liberal, it's all bullshit. They're not there for anything but their institutional mates. Now, who's going to win out of all this? Here's my conspiracy theory. Now, I'm not a conspiracy theorist, but here's my little bit of a conspiracy around this. The people who are going to win out of this are the industry superannuation funds. The industry superannuation funds. Now, I've got no problem with industry super funds providing superannuation for people that do not want to use an advisor, do not need an advisor, maybe have smaller balances, larger balances, doesn't matter, right? But what I do have a problem with is telling people that don't tell the truth. And industry super funds are not the cheapest option out there. They're not, the angels of the industry that are going to fix everything up. They're not that at all. And we can see that with the changes in regulation, the industry super funds are the ones that are going to benefit. They can give advice by people that do not have the same qualifications and do not need the same qualifications under a new label that the government and ASIC is giving them. They can provide advice on one of the largest assets that people have without any, without the same level of qualifications and education. They can provide advice that's outside their scope. They didn't used to be able to provide advice outside of that product, but now they can provide advice outside that scope if there's some sort of relation. And what we're going to basically see is that their scope, I believe, is going to look to be increased because they're not under the same scrutiny as the IFA market. Now, again, this is not right. We need level playing fields. We need competition, because competition gives the market the best outcomes. Competition means that people do a better job and the bad apples go because they can't sustain it. Regulation is important, but it's not just regulation. Competition is key. There's 15,000 advisors out there. If there's 30,000 advisors and it's a lot harder for me to get business, I'm going to work on differentiating my offer. I'm going to work on providing clients with more, value is going to be a huge part of what I do. And obviously it's going to be harder for me to increase my costs unless I can illustrate, unless I can prove that value to my client. Competition is key. You can't reduce competition and get better outcomes. You can't. So at the end of the day, where we're going to with a lot of these reforms, I believe, is really a death, or let's say, a long-term coma for the industry. If I'm a young guy, girl, looking to get out of school and study, am I going to enter the financial planning industry, spend all that time studying, so that I can just be the political football, and going into an environment which doesn't have a level playing field, like accountancy or legal or other areas of finance? Be crazy to, really. So with a world without financial advisors is a world where people are not going to get the best advice. They're not going to get advice from a macro holistic perspective. They're not going to get that long-term partnership. And there's really not many people there to help them in terms of investment markets, geopolitical issues, and other areas that are going to drastically affect the level of their assets and their wealth. So I'm going to end my rant podcast there. I hope that people in the industry and industry bodies and people in government can start to see what's happening in the industry and what effect that will have. It's going to raise up prices. It's going to make advice that much harder for people who really need it to get it. We need a level playing field. We need more competition. Competition and compliance, the two C's. That's the answer. Not just compliance and throwing shit on really good quality people that are out there trying to work their asses off and give good advice to clients who have to battle the stigma of the reputation of their industry, which is completely wrong, and have to do so much work, look at so many different moving goalposts and areas to be able to give their clients, great quality outcomes. Great quality outcomes that are critical not only to their wealth building and to achieve their lifestyle and financial goals, but to their well-being and their financial survival. That's what we do. So if you want to kill an industry, you're going to have to deal with the ramifications of people that doing that type of job not being there. Thank you very much for listening to the rant. It's important to even look at this if you're in another industry. How would, as a business owner, you manage this type of stress, this type of challenge? Because obviously, government does get involved quite a bit with different industries, rightly, wrongly, whatever it may be, around their extent. And it's very important to position your business in such a way that you're forward thinking around what some of that regulation can be, how you can be best practice, how you can offer some of the solutions that you think should be offered, even if it's a bit more stringent from a regulatory or ethical or compliance perspective. I mean, that's a differentiation point, definitely. Please pass on this podcast to other people, primarily those in the financial planning community, and people who are consuming financial planning advice, our clients, so they understand what we're going through and some of the difficulties that we're facing. And please like and subscribe. We've got many more of these podcasts coming after having a bit of a delay or a bit of a hiatus for a couple of months. Thank you very much for listening, and I'll see you on the next one.